Hello, everyone, and welcome to this week's market update from ICM.com. There's someone who's asking a question, maybe. So if you have anything in particular, you can just mention it before we start. Okay, perfect. So we're gonna start first with talking about the latest key movers in the market, especially the movers of last week, and then we're gonna move forward with the key economic releases anticipated this week, and then highlight some of the key levels, technical levels on the MetaTrader 4 platform. So first, let's start with the key movers. Coronavirus continues to be one of the key movers of the market, especially with cases jumping above 25 million around the world and US cases approaching 6 million. However, what we have been witnessing lately is that the average deaths isn't catching up with the new numbers or the rising numbers of COVID-19 cases or the new daily cases. So could be a little bit of supportive to the herd immunity option, and that this could ease some of the woes over the market activity or the economic recovery. So this is one of uh, the key numbers that everyone was been looking on. I'm just going to show you on the John Hopkins University data how this is going forward. So you can see that the daily number of cases has been rising lately, going over another high from the cases, the average that we've been witnessing in early March, April. However, the deaths didn't cross much, or the average deaths didn't cross much above the previous high. So this could be a bit of an optimistic in what we are witnessing in the market. So you can see here the daily cases in an uptrend. We can see that the recent daily cases are much higher than the previous ones. However, they are much higher than the previous one. You can watch here the difference between the cases in August and the cases in May. They rounded here 1,000, but today we're almost having around between 250 and 300,000 cases every day. So if we just go for the deaths, which is the next slide, you can see here the number of deaths back in March, May, and April and May, rounded around 8,000, 6,000 to 8,000, and currently we are almost between 4,000 and 6,000. So this is easing a little bit the woes of investors around what could be next for COVID-19. So this could be supportive for a positive market sentiment. So this is for the first mover. The second mover was the US-China trade talks. There was a phone call last week between a Chinese vice premier and Robert Lighthizer and Stephen Mnuchin to discuss the implementation of Phase 1 trade deal. We know that earlier this year, China and the United States reached a certain deal on in order to the Phase 1 deal in order to cut their problems or their tensions a little bit. So there was a call in order to follow up on the implementation of the Phase 1 deal. Both sides agreed to provide a certain positive medium or environment in order to continue the implementation of Phase 1. This also lowered or lessened investors' concerns over the relation between China and the United States, despite of all the tensions that are still there. So this is also one of the key topics or key movers that you have to keep on watching. Moving also, we had the Jackson Hole Symposium. It's one of the key economic events that happens in August. So among the key speeches was Jerome Powell's speech. So everyone was anticipating how the Fed will communicate to the market the recent changes in the policy. So Powell stated that the Fed will target average inflation. And that their main focus is to highlight unemployment, and they believe that they have to face employment or face unemployment so they can reduce unemployment and focus on having low unemployment rates before focusing on inflation, the new monetary policy frame or strategy. So this was one of the key statements that Powell mentioned. Everyone was waiting for this. So this hinted that interest rates will remain low for a certain period of time, maybe an extended period of time, and this weighed on the US dollar, and we witnessed the US dollar weakening against other major currencies, and also gold. We witnessed gold rising to almost 1970 levels again this week. So this is from from Fed's Powell and Jackson Hole Symposium. Also, he added that the Fed will not hesitate to take any action if inflation rises above levels consistent with our goals. So if let's say they have a certain goal, for example, 2%, 2.5%, if they notice that inflation went above the 2.5%, for example, a certain level for a longer period of time or for an additional period of time, this could trigger further steps from the Federal Reserve or any steps from the Federal Reserve maybe to tackle this inflation. Among these steps that could be taken, first, the Fed could also taper the asset purchases and then could think about raising interest rates again. So this is from Jackson Hole Symposium. Also, U.S. storms. We had the storms in the United States, tropical storm and also hurricane, which weighed on the production in the Gulf of Mexico. Almost top oil producers lowered around 70 to 80% from their production, and this gave a little bit of a nudge to oil prices. However, they turned back to their neutral level uh, earlier this week. The economic data, we had the second review of the US GDP, still showing a massive contraction, but better than the previous reading or the preliminary reading. This had an impact on the market also. Uh, so these were the top key movers for the last week. Also, we had one on the weekend, Japan's Abe's resignation. So this could create a little bit of uncertainty in Japan. However, where we still lack a little bit of solid anticipations or solid assumptions on how this will impact the Japanese economy. So these are the key movers to watch out for. Let's go for the top economic events for the week. It is a very busy calendar this week. Every day we have data in the Asian session, also during the European and the US session. So let's start with the Tuesday. Tomorrow we have the manufacturing PMI from China. Expectations of a reading of 52.6 in August, ranging a little bit slightly lower from the previous reading of 52.8 in September. Moving to one of the key events this week, the RBA interest rate decision. Interest rates are expected to remain unchanged at 0.25%, and there are no expectations that the RBA could move or could change the settings of the monetary policy. So this could have a little bit of an impact on the market, not a massive one. It depends if there were some surprises. Definitely, we will witness some volatility on the Australian dollar pairs. Moving to Europe, we have the German unemployment change expectations of 1,000 uh, versus a negative 18,000 prior in July. Also, we have the final reading of the manufacturing PMI in August from the Eurozone and the United Kingdom. Expectations of readings to remain unchanged from the preliminary 51.7 for the Eurozone and 55.3 for the United Kingdom. Also, the Eurozone Consumer Price Index year on year for August, expectations of a rise by 0.2%, and the unemployment rate to also move higher towards 8% from 7.8 back in June. And from the United States, we have the ISM manufacturing PMI. It's among the key readings to watch out for. We have an anticipation of 54.5 reading versus 54.2 in July. It is also could be considered a very good reading. And then we end the day with the weekly crude oil stock by the American Petroleum Institute. Okay, moving to Wednesday. Also, we start from Australia with the GDP, second quarter GDP reading expectations of a contraction of 6%. The German retail sales from the Eurozone expectations of a rise by 0.5% in June versus contraction of 1.6% back in July versus 1.6% contraction in June. The ADP non-farm employment change could give us an example or a hint on how the final reading could be. The NFP reading on Friday could be expectations of a rise of 900,000 in August. US factory orders also an increase or expansion by 6% versus 6.2% in June. Still a strong number, a solid number. The weekly crude oil inventories by the US Energy Information Administration, and then we end the day with the beige book, which gives us hint on the performance of 12 districts. Moving to Thursday, also we start from Australia with a trade balance, expectations of a surplus of 4.85 relative to 8.2 in June. The Eurozone Services PMI final reading from the Eurozone and the United Kingdom, also no changes expected from the preliminary reading. UK, United Kingdom retail sales expectations of a rise 1.4% from versus 5.7 in June. And then the Eurozone retail sales expectations of a rise 1.4% in July versus 5.7 in June. The United States initial jobless claims expected to rise 980,000 versus almost more than a little bit from 1 million last week. And the trade balance in the United States, expectation of a widened deficit of 52.3 billion. From the United Kingdom, the Bank of England Governor Bailey will be speaking about cryptocurrencies, so those who are interested in Bitcoin and cryptocurrencies could watch out for his speech, since he will be talking about the future of cryptocurrencies and how they can affect the economy. So this could be one of the speeches that people who are interested in cryptocurrencies could be following. And then we have the ISM non-manufacturing PMI from the United States, also expectations of 57 versus 58.1 prior. Still 57 is a good reading and in the expansion territory. On Friday, it is also a busy day. We start with retail sales from Australia, 3.3% expectations, expansion in July. The United Kingdom construction PMI expectations of 58.5, strong reading versus 58.1 in July. And then we have the key event of the week, the US jobs report. The expectations that the average hourly earnings would remain unchanged. Non-farm payrolls to rise by 1.4 million, which could be a very good number, showing that the labor market is recovering from the impact of the coronavirus. Unemployment rate also is expected to drop below 10 towards 9.8%. Also, we have the Canadian jobs report coming out at the same time. Expectations that employment change could rise by 275,000. Unemployment rate to drop to 10.1 from 10.9 earlier, which is also a good change. And then we have the IVPMI, expectations of 57.5 reading. And we end the week with the S. Baker Hughes oil rig count staying at 180. So these are the key economic events or the key economic releases that you have to watch out for this week. Moving to the MetaTrader 4 platform in order to have some technical analysis on key pairs. Okay, so first let's start with the euro dollar. Okay, so first let's start with the weekly chart, and then we're gonna scroll lower to lower time frames. So on the upper band, you can I'm just gonna add some indicators. You can watch that. In the previous weeks we were trading outside of the Bollinger Band, the upper band. However, now we're still in, and we could be targeting the upper band of the Bollinger Band, which stays around 21.15, and the RSI is slightly above the 70 level. If we go for the daily chart, you can notice that we're still inside a certain range, inside the tight range, slightly less than 120, and from below we're finding support near 117 area. We also can draw a trend line on the RSI, a downtrend line on the RSI. We're currently trading almost at it, and the price is crossing above the upper band of the Bollinger Band, so this could be a little bit of a positive move. Also, you can notice how the 100-hour H4 exponential moving average provided support for the euro dollar cross on the past couple of weeks. So all the time, every dip below the 100 H4 exponential moving average was being bought, and currently we are trading near the upper band, slightly away, or around 100 pips away, more than 100 pips away from the moving average. So this also could be a key movement. Also here you can draw the RSI line, the trend line. We are also trading near the trend line on the RSI. So in order to highlight some key levels, I'm just gonna remove these indicators and just focus on the price itself. So in order to tackle some targets or to check some targets for the euro dollar, you can just draw the Fibonacci retracement. So we can see that the price struggled near the 61.8, still trading inside the range near the 61.8. The current level could be the 76. The next level could be the 76.4, which stands at 121 level, which also coincides with the previous resistance zone back in September 2019 and also January 2018. So watch out for 121 to be among the key levels, and after that we have the 122 level, which is the bottom of the range of the bound that stood back in February, March, and April 2018. So these are the key levels on the upside if you are trading the euro dollar, along with the 120 psychological level, definitely. But since we're a little bit close to 120, we have to highlight some further numbers. And on the downside, you better watch for any cross below the 117. I'm just gonna get closer. So first, watch out for how the price will react with the current trend line combining the bottoms that have been holding, so around 117.80, 117.60 level, and after that we have the 116 level, which was the previous so among the key levels, I'm going to highlight them again. So we have the previous bottom here around 115, and then we have the bottom of the range around 116.95. On the upside, we have 120 level, the 120.21 that we just talked about, around 76.4% of the oil retracement, and along with the previous resistance level and the 122 level, also the previous bottom of the previous range, traded in February, March, and April 2018. So these are the key levels. If you are trading the euro dollar, you better watch out for these key levels. And in terms of reversals or pivot points, you have to watch out for any reversal back below the 118 level, 118.50 level. This could signal further weakness in the pair. So this is for the euro dollar. Moving to the pound, British pound against the US dollar. I'm going to start also with the weekly chart. You can notice here that we were able to break significantly above the trend line, combining the previous tops during the past week, and closed above it. So also if we just have to add some of the indicators, you can notice how the 200-week exponential moving average was acting as a key support for the market, and currently we are trading near the upper levels. The RSI is around 64, which is still bullish, and isn't yet close to any overbought territory. In order to highlight some key events, I'm just gonna go to the daily chart, just remove all these indicators. You can notice here that we are trading near the trend line, combining the previous recent tops, and also we have a certain uptrend line, a straight or a steep uptrend line. So watch out how the price will react with this ascending, could be ascending wedge. It's a bit slopey or a bit steep for being a wedge, but still we can find some levels trading near the key levels drawn from these trend lines. So watch out how the price will emerge from this wedge. Going to highlighting the key levels, you better watch out for. On the upside, we have the 33.70, which was today's almost today's high. We traded at 33.68 earlier today, and it was the previous level here. So watch out for this key level, and then after that we have another one near 135.15, and after near 136.50. So these are the key levels if you are trading the pound dollar and you're focusing on levels to the upside. These could be the key levels on the upside. However, on the downside, you better watch out for any reversal below 32.65, which was the previous high, and then also another previous high near 31.80, and the bottom near 29.97, 29.70, excuse me. So these are the key levels if you are trading British pound against the United States dollar. On the upside, 33.70, 35.15, and 36.55, and on the downside, 32.65, 31.70, and 29.70. These are the key levels for the pound against the dollar. The dollar yen is trading inside a tight range between 107 and 105. It is a bit clear that we are trading inside this range for the past couple of weeks. So we need to break out of the zone. We're currently trading in the middle near 106 levels, so in the middle range of this area. So watch out how the price will react and how it will trade along with these levels. So just highlight additional levels. We have the 118, 108.20, and also the 104. 104.20 levels. These are the key levels for the dollar against the yen. Witnessed a little bit of volatility due to Abi's resignation, but still, we are on the bigger picture. We are inside this bigger consolidation area of 200 pips almost. So these are the key levels to watch out for if you are trading the dollar against the Japanese yen. Moving to the Australian dollar, which was really bullish and strong in the past couple of days. So we highlighted that we have the Reserve Bank of Australia interest rate decision today, so better watch out for any surprises. Also, there was a key trend line, so we are almost trading above it. So combining these stops, it broke above it, and then we had a little bit of retracement to it, and then the market moved again higher. So watch out for any reversal below 73.20. It could be pivotal. So I'm gonna highlight this level here. Also, we have another key line combining the bottom. So let's just go for a closer look. So if you want to draw on a closer look, if you just want to draw the previous tops, the key tops at the beginning of this formation, you can notice how the price reacted twice to this top, and also here we have another trend line combining almost all the recent lows. So watch out how the price will emerge from this widening formation. In order to highlight some key levels, I'm just gonna get back. If you are trading looking for levels on the downside, you have to watch out for the previous resistance or previous stop, which was around 72.50 level, and then after that you better watch for 71.60 or 71.80 zone here, and then after that the bottom of this the first low of this formation around 70.60. So these are the key levels on the downside. And on the upside, I'm just gonna go back to previous levels. On the upside, we have previous resistance almost near this area around 73.94, and then also a previous stop, which was at the time a certain support near also 74.85. So these are the key levels if you are trading the Australian dollar, key support and resistance. The New Zealand dollar is almost facing also the same formation. It is a bit bullish. So as you can see, we witnessed last week a huge reversal or a strong rally. This weakness here was due to the RBNZ decision of expanding the asset purchases. However, the sentiment last week was really strong, positive, and we were able to trade among near the highest levels this year. In order to watch out for some resistance level, watch out the previous resistance near 67.85. And then after that, the top of this consolidation area near 69.60. So these are the key levels. If you also combine the previous tops here, you just have the same level. I'm just going to do it on the daily chart. If you just combine the previous clear tops here, you can notice also that these two, the level and the top trend line, they are close. And if we just also extend this here, you can notice that the price is trading inside a certain channel. So watch out how the price will react with this channel. Watch out for the top side. And after that, if we were able to break above the top side, maybe we could be heading towards 69.60. And if there could be a reversal on the bottom line, we have to look for or call some bottoms near almost the previous low 65.13 area, 65.10. And previously here around 65.88. So these are the levels on the downside, 65.90, 65 level, and the previous also bottom near 63.80. So these are the key levels if you are trading the New Zealand dollar against the United States dollar. Moving to the USD CAD. Okay, so let's start with the weekly chart. It is very clear a series of negative weeks or dropping weeks, a series of consecutive losses for this pair. For the SD CAD, to watch out for support zones, you have to watch out for the previous bottom near 29.47 and the headed 127.70. So these are the levels. If we just add some indicators, you can notice how the price has been trading near the lower band of the Bollinger Band and closing to the RSI, the 30 level. On the daily chart, you can notice how we are trading in the lower band between the middle band, which is the 20 simple moving average, and the bottom line. So we are trading almost in this. And also you can, if you just combine these tops and bottoms, you can notice the channel that we have been trading in. So watch out for the sides of this channel if you are trading the USD against the CAD. And in terms of reversals, in order to if you are waiting for reversals, at least we have to break above the 20-day simple moving average, which is sitting around 132, and also the above resistance line, which could be around 32.40, ahead also of the bottom near 33.50 levels. So these are the levels on the upside: 32.40, a little bit far from here, 32.40, 34.57, and the interim resistance near the previous low that held for almost a week near 31.27. So these are the key levels on the upside, and on the downside we highlighted 129.50 and 127.72. So these are the key levels if you are trading the USD against the United States dollar against the Canadian dollar. So let's move to gold. Okay, so as you can see here, gold, we had this massive move, and then we have a smaller wave, and then another smaller wave, and now also we have another smaller wave. So the price is consolidating inside a certain pattern. We can see lower highs and we can see higher lows. This consolidation will come to an end at a certain time. We are just awaiting some key fundamental drivers. A lot of investors were awaiting for the Jackson Hole to be one of the key events that could drive could drive gold out of this consolidation area. So maybe this week the U.S. jobless claims could have some impact on the market and could lead to certain move. In order to highlight some of the top levels to watch out for, first you have to watch out for any reversal below 119.50, and then after that 1900 level, which was the lowest last week, and then the bottom of 1860. These are the key levels on the downside. We can see how the price dropped today towards 1953 and then moved back higher towards 1976. Another key level 1900 and 1860. And on the upside, you better watch out for the previous top near 1980, 1985 level, and then the new interim high near 2015, 2017, and after that around 2050. So these are the key levels, key supports and resistances. We are just awaiting. The week is full of economic data that could spark investors' appetite. So watch out how the price will react with the coming data, since they also highlight how the economic activity is going or how the economic recovery is going. So definitely will have an impact on the market. So watch out how gold will react to the current to these changes in data. So these are the key levels for gold. If you are trading gold, watch out for these key tops and bottoms. Moving to the WTI, nothing much is happening on the WTI. Still, as we said, we had a little bit of nudge higher last week due to the storms in the United States, which interrupted production. However, on the bigger picture, we are still trading sideways up in a smaller range. Also, you can see here this uptrend line, series of higher lows. We have also series of higher highs, but still the moves aren't significant. If we just add the indicators, you can see on the weekly chart here we're still in the upper band, in the upper area between the lower band, the middle band and the upper band. On the daily chart, you can see that the band is narrowing. It widened at a certain stage due to this spike here. However, now we are just still closing in again. So nothing much on the oil front. We've been finding support near the 100 H4 exponential moving average, but still, like there is nothing solid for oil as investors await some fresh clarity on the future of demand levels, which would definitely affect the price. Moving to Dow Jones, which was reversing earlier today from a key from a key strong performance. Despite this drop, it's still performing, having its best performance in August since more in more than almost 30 years. So I'm just gonna remove these levels. So we're still far away a little bit from the 29,500 levels. If you just compare the Dow Jones to the S&P 500 and Nasdaq, we can see that the other indices rose to fresh high. However, the Dow Jones is still a little bit struggling in following to record highs, this is a reason for investors preferring some industries on other industries or some sectors on other. So this is among the key levels why the key factors why the Dow Jones is still behind. We can notice that the price has found almost resistance near the previous support that was found before the last record high. So watch out for any break above 25,845 again, or 850, and then after that we could be heading towards the new record near 25,960. And on the downside, watch out for the previous top 28,000 almost level, and after that also we have this line that we talked about during last week, educational week ahead. So you can notice how the price reacted here. We had the top, another top, so we joined them with the line. The price here found the resistance near it and then was able to break above this resistance with strong momentum, and then had a little bit of a correction towards this line ahead of moving higher. And you can see here also we have this formation. This is almost an ABCD formation, where after this correction the prices rose to almost 200%. So if you just highlight this reversal here, you can notice how the top was almost exactly at the 200% of this leg higher. So it was just really good to call a certain top. Now notice how you better watch out how the price would react to this trend line here. So this could be a very important level to watch out for, because it would also coincide with certain key levels or the previous tops. So watch out how the price will react and how the Dow Jones will perform this week, especially after its strong performance during the past 2 weeks. So this is all for today. In the week ahead, if you just have any questions, please write them down. I would just like to remind you that all the information, news, analysis, and opinions mentioned in this webinar only serve for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument, and ICM doesn't provide any investment advice. Okay, so someone is asking about the pound against the Australian dollar. I'm just going to highlight it. Let's go over the pound against the Australian dollar. So we can witness that both pairs during the past week, both currencies, the pound and the Australian dollar, were strong during the past week. This is this was one of the key things that you have to notice. But however, we were trading inside a certain consolidation range between almost 184 level and on the downside 181. So this 300 pips range, and currently we are emerging outside of this consolidation zone. But however, you have to keep in mind that you have the RBA interest rate decision tomorrow, so watch out how this will impact the Australian dollar. If we had any surprises to the downside from the RBA, this could have a little bit of a reversal impact on the market. Maybe we could retest 184 level. And if the Australian dollar continued to strengthen and anything emerged, any negative vibes or any negative news emerged from the United Kingdom, this pair could move to the downside, noticing dropping near 78.56 area. So, and after that near 177 if we were able to trade in a downtrend or fall to a certain downtrend. So you can see here on the smaller time frame, you can see this consolidation zone. It was really clear consolidation zone. If you go for a closer look, you can see here the steepness of this trend line combining all these. So any signs of reversal should first start with the break of this trend line and then moving at least to the middle of this range that was trading here between 181 and 184 level in order to have some optimism or some bullishness on this pair. I'd just like to remind you again that all the opinions, news, analysis, and information mentioned in this webinar only serve for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument. Okay, so there was some very smart question wondering why JPY got stronger against the US dollar when Japan PM when the Japanese Prime Minister submitted his resignation while he was asking that should this normally weaken JPY, consider Abe-san as a success or a successful prime minister. So the thing is that Abe was always going for expansionary economic policy, and this expansionary economic policy always weakened the Japanese yen. So it had them focus a certain weakness for Japanese yen. Back then in 2011, the Japanese yen dropped to around the dollar against the yen, reached almost 72 level when the tsunami hit, and then after that we due to certain expansionary measures the pair rallied towards key highs around 126 level. So just talking about Abi's resignation, this has raised concerns about the possible shift away from this expansionary phase or expansionary mode, or what is known as Abenomics. So this what drove investors towards the Japanese yen. So maybe this was one of the key reasons that if Abe resigns, so maybe this would impact the expansionary economic policy, and this could definitely put us in another situation, the one that we've been witnessing ahead of 2011, where the Japanese yen was strengthening sharply against other key currencies, and among them the US dollar. And definitely, let's not forget about the Jackson Hole Symposium, or the Powell's speech, which also weakened the dollar. So we had two reasons that affected the dollar yen pair. So if you have any questions, any further questions, please ask them now. Write them down so we can discuss them. It's a busy week ahead. Just a small reminder: the RBA tomorrow is one of the key events, and then the US jobs report on Friday. These are among the key events and releases this week you better watch out for. Okay, perfect. I believe this is it for today. If you have any questions, just write an email to webinar@icm.com or support@icm.com, or just reply to the email that you got on your inbox. So, and that's it. This is all for today. Thank you all for joining, and have a safe trading this week.